Hey guys, Sean Pruitt here, president of Kingdom Exploration. I got a lot of oil and gas news, and I'm expecting to see $100 oil by the end of this year. And every analyst seems to be in agreement with this. In fact, I believe a CBS Newsacre reported that every analyst that he's brought on thus far has said that, hey, we're expecting to see $100 oil by the end of this year. So if you're interested in oil and gas news, this is a channel for you. Please subscribe. Okay. So right now, WTI crude is trading at $77.69, Brent crude $84.40. Goldman sees oil price spike in 2024 as spare capacity runs thin. Now, every analyst seems to be saying the same thing. Okay. So the important thing here is that the biggest news wasn't Russia last year, it was China. Now, when you have 1.4 billion people under lockdown for 3 years, what do you think is going to happen to the demand of crude? Of course, it's going to reduce. Rip off the COVID restrictions. All of those guys that have been sitting home or been reduced amount of travel, all of a sudden they're gonna have the itch to travel like you wouldn't believe. And so there's new market data that is showing the truth about China, that they have ripped away the COVID restrictions and the demand for crude is increasing substantially. It's been all talk up until now. So now we have the data that supports that China has come out of lockdowns. Okay. And so last year we had spare crude on the markets, because China wasn't buying it, because everybody was preparing for the amount of crude and they were calculating China. Well, China didn't buy the oil, okay, because they still kept the COVID restrictions, okay? And so then China, there was many things, many movements thinking, okay, China's going to come out of lockdown. Well, they didn't. And it kept happening over and over again. And then we thought Russian crude, we were going to lose 3 million barrels of Russian crude. Well, that never happened either. So there was an extra 2 or 3 million barrels of oil out there per day that we were assuming that was going to be zapped by China and the demand oil exports of Russia to be reduced. So we had all this spare oil on the markets, and EIA would report about it saying, hey, listen, the strategic petroleum reserves worldwide are increasing. Well, because we all had all that extra crude. But once all that spare capacity is absorbed by China's new growth, because, man, they're coming out of lockdown, and the data suggests that we could be out of spare capacity here in the next 3 months. Well, where's that extra oil going to come from? I mean, you're not going to get it from Shale, okay? And so if you look here, so here's the price. Actually, let's look at the price of oil, okay? So here's the price of oil. Back in 2018, oil was $53 a barrel, and it bounced around, and then it climbed to as high as $130 per barrel, simply because of Russia invading Ukraine. And so today, as you can see, the WTI price is $76 a barrel. Now, if you look at, these are the amount of rigs. So, for instance, 2018, there was 1,000 active rigs. And this is oil rigs, and this is gas rigs, and this is oil and gas rigs combined. Okay. And so if you look here, as oil rigs increase, the price of oil normally drops, because the more rigs, the more wells being fracked, the more wells being brought online, eventually you're going to see the price of crude come down, because if you increase the amount of wells being drilled, you increase the amount of oil being produced, and of course, the price of crude should come down, okay? But let's look here. If you look at production in 2018 was 10.38 million barrels of oil, and then the production in 2020 was 13 million barrels of oil, and then it dropped because of COVID and everything else that happened, okay? And then you saw a slow increase to 12.3 million barrels of oil, okay? And so you got to understand something. In order to increase, okay, in order for instance, let's say we wanted to add an additional million barrels of oil, that would mean we would have to increase roughly 400,000 barrels of oil for every million barrels of oil we're producing before we see an increase, because there's a decline of 45% a year for every well that's producing out of the formation called Shale. We are not spending enough capital to increase the output of Shale. Shale is done, okay? If you look here, back in 2018, we had over 1,000 oil and gas rigs. These are the fracs, okay? These are frac spreads, okay? They call it frac spread because, look, you have an oil rig, but you don't have a fracking rig. A frac is a crew. It's equipment. There's semi trucks. There's these high pressurized fracking equipment anyways. And so the frac spread, imagine it as fracking equipment to go frack a well, okay? And so you got oil rigs, they drill the well, and then you got the fracking crew that comes out to frack the well, okay? Well, look here. Fracking has been reduced. The amount of completions is at 266, okay? That's not enough fracks. That's not enough completions to keep up with even the decline of shale. For every million barrels of oil that we produce, okay? And so right now we're producing 12 million barrels of oil a day, okay? And so that means we're producing about 7 million barrels of shale oil. 7 million barrels of oil. That means we have to increase by 3 million barrels a day each year in order for us to maintain our current output of 12 million barrels a day. There's not enough fracking crews out there, and there's not enough rigs out there to keep up with that. It's impossible, okay? And so in addition to that, we're not spending enough capital. I mean, you could send out a bunch of fracking crews and a bunch of rigs out there, but if you don't have enough money to keep them out there, because there's been a huge decline in capital to develop oil and gas, because the ESGs of the world, you're seeing a tremendous amount of data suggesting that, hey guys, don't worry, we got enough crude. Green energy is here to save the day. You got a tremendous amount of data that suggests that crude oil is evil. Climate change is real. We're going to end the world. We got to lower emissions and so on and so forth. Okay. So it's really confused the investment arena. And so the price of crude is priced in speculation, pure speculation. There was a time when it was purely based upon fundamentals. There was a time back in the 50s, 60s, a huge airline would hedge the price of crude by going up to a large oil company and say, hey, listen, we'll buy X amount of oil for this price for the next 3 years. Then in the event that there is an invasion in Ukraine or a bomb dropped in Saudi Arabia, they won't go out of business, or it won't outprice the fare cost to travel for Americans, and won't shut down the airline industry. So that was put in place. So that's called hedging. Okay. Well, remove the airline, remove the oil company, and replace it with a guy wearing a suit on Wall Street. And now you've got millions of transactions being done without even the airlines or the oil companies being involved. So now it's purely based upon speculation, as opposed to, because if an oil company and an airline sit down together, the oil company has a better understanding of how much supply and demand there is. The airline does too. When they come together, they share their information, they share their data. Okay. There's an intellectual conversation about oil, the demand for oil. And so there's a mutual respect for the price of a barrel of crude. Okay. But now you throw it on the stock exchange, and now it's futures. You got a lot of dumb money chasing after the price of crude, making quick decisions that versus where a huge airline would make a slow decision, and they would look at all the data. You see what I'm saying? And so here's the deal. Because of information drives oil prices now more than ever versus fundamentals. And so now the left is winning the information war. Biden doesn't want oil prices to be high. Therefore, they're going to use, because the EIA, everybody listens to the EIA, Energy Information Administration. They're the ones that hold all the data regarding oil demand, oil supply, and future oil demand and future oil supply. Well, they're located in Washington, D.C., 100% funded by D.C., and the left wants the price of crude as low as possible. So that's why you're seeing all these low volume trades. I don't care what the demand for crude is. If demand for crude doubled today, but Wall Street didn't believe it, if investors didn't believe it, if the guys in suits that they work hard all day and then they meet up at the bars to get wasted with their buddies, if those guys don't believe it, then the price of crude is going to go down when fundamentally speaking, when these guys at the airlines and these oil companies are thinking, what the hell's going on here? That just doesn't make any sense. That's why all the analysts are getting it wrong, because they can't properly foresee the price of crude because it's not based on fundamentals anymore. And something I forgot to mention here, as I was cutting video, I realized that I forgot to mention the whole point to the prices not being based on fundamentals. It's causing a reduction in oil investment. And the underinvestment cycle is causing the reduction of oil development and also oil production. And this is going to cause a huge spike in oil prices, because here's the deal. If you can't properly speculate on what the price of a barrel of crude should be, why would you invest in that? Okay. And so there's been many analysts that have lost their butts in the oil and gas. And I mean, think about it. Jeff Currie said we're going to see $130 oil we should have already been there this year. Well, we're at 70 something. Okay. We're at 80 something dollars a barrel for Brent crude. Now, the analysts have gotten us so wrong. And then all of these speculators were investing based upon what the analysts were saying. They lost their butts reducing the volume of trades, reducing the amount of investment. And the longer we stay in this environment where there's negative news about oil and gas, where there's anti-oil and gas, where there's global warming and the anti-energy agenda and the reduction, making it difficult for oil and gas companies to develop on their own native lands, this is going to cause the price of crude to go up substantially, because we do not have enough supply for tomorrow, because we're not investing enough for tomorrow's demand. And so here's something you guys really need to be paying attention to. You need to be paying attention to Iran. Iran can make a fissile material for a bomb in about 12 days, U.S. official. Here's the deal. They can make nuclear bombs in 12 days. Now, that is more dangerous today than it's ever been, because Iran has drones that could go 2,000 miles. Iranian warships dock in Brazil. I mean, they're in their Iran is in our backyard now. U.S. Navy official says Iranian attacks in the Middle East have the attention of everyone. Okay. And so here's what you need to understand. Russia's using Iranian drones to drop bombs in Ukraine. Ukraine is using drones to drop bombs in Russia. What do you think they're dropping bombs on? They're not dropping bombs on, they're dropping bombs on military bases and military equipment, but their main focus is taking out the energy infrastructure. Iran, for years, has been trying to take out Saudi key oil energy infrastructure. They have successfully taken down oil facilities multiple times in 2019. Israel is dropping bombs on Syrian in different Iranian Houthi-backed countries. They're focused on taking out energy infrastructure. So here's the deal. Everybody is using drones to take out oil infrastructure. Okay. Well, now Iran has the ability to use nuclear bombs with drones. I mean, imagine if they had imagine if they had nuclear warheads back in 2019. They were able to knock out 1 million barrels of oil in Saudi Arabia only for a week, and then they brought it back online. But if they dropped a nuclear bomb, it would shut it down indefinitely. Imagine what that would do to the price of crude. Guys, I'm telling you, if you had, this should be on the front page of every single newspaper in the world. Iran has drones that could go 2,000 miles, and they have nuclear capabilities. Guys, I'm telling you right now, this is the most speculative oil has ever been. But even if nobody uses nuclear bombs, even if Iran, Russia, nobody uses drones to attack oil facilities, at the end of the day, China's demand is going to speak louder than anything else. And we just do not have the supply to maintain the increased demand in China, in India, and several other countries on the East. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe, and we'll talk soon. Thanks.